G'day there. Welcome to the Closing Bell on the 3rd of December. I actually recorded this on the 1st because we had our Christmas party on Friday. So really, I guess what I can talk about today is the move we saw for me last night with the US stock market really taking off on the back of Jerome Powell's speech. The last time he spoke at Jackson Hole, he frightened the pants off the market, and everything got hammered because he was so hawkish. And we've had the reverse this time, sort of saying that they're getting close to slowing down the pace of increases, but still not there yet. Has the market taken this a bit too dovishly? We'll find out, I guess. But things are just, slowly evolving. We started off with that short-term uptrend, which I've been telling you about for the last month. And it's slowly evolving where this can continue to the upside for a bit longer. Doesn't say it's all over. It's a new bull market just yet. But we may be in for a bit of a Santa rally. Bit more shorts getting squeezed out of their positions. But also gold. I've been talking about that for a while. On the 12th of November, I actually had a chat about gold and gave you a stock to consider there. So I want to just follow up on that, show you what's happened since. And we've had the confirmation of the monthly buy pivot in gold now. So things getting a bit more constructive on that front. Perhaps people saying if they are going to, slow down the rate of rate increases, if it's not going to go that much further, does inflation stay a bit high? But people obviously switching to gold a bit now, thinking that it might have a chance to take off if those real rates don't head up massively from here. So there's a few stocks out there looking interesting, and yeah, I did give you one a month ago, so hopefully a few of you jumped on that. If you did, let me know in the comments. So let's just actually jump to gold right now and just have a look at the chart, and I want to do a follow-up on the analysis I gave you a month ago. So this is the gold price here. We've had the switch over to a new month, and I've been waiting on this, whether it was going to actually confirm the monthly buy pivot, which has been confirmed now, and that's because on the monthly basis, it's closed above the high of that lowest price candle in the move. So prices marching down, selling off on the monthly basis. There's your low. We've got a monthly close above the high. So that's just saying that, there's a chance it could have a bit of a move to the upside. The last time we had a monthly buy pivot was here back in 2021. And look, that did end up leading to quite a rally in gold, all the way back to the all-time high before selling off. So this correction now has been going on for quite a while in gold, a couple of years. But as I've been saying, there's a very strong rally beneath it. So when you do have that, if the trend to the upside is going to continue, you want to be buying the false breaks of major levels, because that's often the beginning to the next leg higher. So looking a bit constructive there. We've got a line in the sand on this. If we see things roll over and turns back down, and really from here, heading back below the low of the whole correction, about around $1,600 in gold. I'm not really loving it. So, devil's advocate, we do still have the monthly downtrend, which just switched. So there is a chance there's selling pressure up in this zone. So if it does just get hit and actually cracks down below that low, I'm very bearish, expecting to see a much larger correction. But while that level holds, I have to switch to a short-term constructive move to the upside. There can be weakness. It can actually, sell off close to that low, but as long as it remains above it, it can actually provide opportunities to jump on at better levels. Because if you see in the past, we have that low there. Look how close it got on this leg, this sell-off. You'll see we had the monthly buy pivot, things turning back up, had another good constructive month the next month, everything looking fantastic. But then we had a big shakeout. And this is the thing I look for, is these big shakeouts. You had that wave to the upside, which really went all the way down to the buy zone area that I talk about. That's 75 to 87.5% retracement. That's what clears out all those early buyers. And then in the end, it does turn up. And so they're the people kicking themselves. They got shaken out on that 2-month sell-off. It never broke below the major low. So the whole thing was still constructive. There was no monthly sell pivot, and ended up taking off to the upside. So the fact that we've had, you know, a longer correction as well, and it's managed to just have a, you know, a quick clear out of positions below the low of the whole correction before turning up, gives you a sense that there is latent demand there, that it was pretty quick to turn back up, and really you'd expect the move to the midpoint of that correction. So if we're looking at that whole move there, we know that the midpoint of that coming in around 1880, I believe it is. So that's sort of your first port of call, saying that you've got a pretty good probability of it at least getting to there. From there, look, it may turn back down. You know, you've got to be ready for anything. But the situation now is just that there's a higher probability that even if we see weakness, that it'll stay above that major level and that it'll get back to around 1880. So that gives you the chance in those gold stocks to ride a bit of a run and, you know, take part profit, create the free option and see what happens. So I'm a bit more constructive on gold. And I did tell you, you know, on the 12th, actually, I gave you a stock. And the stock I told you about a month ago was Newcrest Mining, saying that it was setting itself up quite nicely as a buy. And I just wanted to go through, now that it's starting to take off and do what I want it to do, just wanted to recap for you so you could understand how these things evolve. And first of all, just apologies, members of my service. We actually went into this just recently, and actually after I told you guys about it in the Closing Bell video. And I don't usually do that. I don't usually buy a stock, or I don't usually give away a free stock to people prior to actually going into it in my services, because I didn't think I was going to buy Newcrest. But then I just ended up liking it so much that we ended up going into it just a few weeks ago. So just to recap on this, you know, this is a great example of how I look at things. Going back to 1997, you know, here's a huge wave in Newcrest Mining up, you know, massive run up to around $43 or so from near nothing. So that's a massive wave. And I want you to notice those levels that I look out for: the buy zone, the sell zone, the point of control of that whole structure. That's in the very long term, you know, and just notice how that's worked out. You know, you get that huge clear out all the way down into the buy zone. That's the area you're looking for reversals. And when you get a reversal, you're looking for it to at least hit that point of control. And you can see it did. And look, it had an overshoot initially, but then it did actually spend, you know, 2-3 years just trading around that point of control before managing to blast off. And where did it blast off to? The top of the sell zone of that wave. And that's where the big selling pressure was. You can see there. And where did it fall to when the selling pressure overwhelmed? Well, it fell straight back to the point of control. Then it took off. And again, selling pressure was still there, fell straight back to the point of control again. And you can see here, it's cracked and it's really had a big sell-off. And this is how things can evolve, is that all of these waves are a derivative of each other. So I'm then looking at the most recent major wave, and considering that. So then I'm sort of looking at that down wave and analyzing how things are moving based on that. So if we do that, and look at this down wave, you'll see again, we've got the constructive moves here, haven't we? We can understand this move a bit better. We've got this wave to the upside. That's where the selling pressure came in at the point of control. And where did it sell off to? Right to the buy zone. So lots of work done. Took off. Where did it go to? The sell zone. You can see there. And that's where the selling pressure was, back to the point of control, selling pressure back to the point of control. And then we had this big wave down. And where did it get to? Right to the top of the buy zone of that wave. And then last month, you can see there, we've got the monthly buy pivot last month. And, you know, I was actually telling you before that was created, when I told you about it on the 12th of November, that this was possibly setting up as a monthly buy pivot from a major buy zone. And then I'm also looking at a past major low. So I'm looking at this whole structure as a wave to the upside and then a correction in an A, B, C formation. And then when you get overlap at A, that major low, which is where it's just piling through right now today, that's when it can really blast off to that next wave higher from that very major buy zone. So the overall structure was pretty classic, and it's now looking good from the point of view of needing to rally and at least sort of get to that point of control around 25 bucks. So I think there's a good probability of that. And, you know, from there, that's when you sort of, for me, that's when I take part profit. So I sell a third of the position there. And once you've sold a third of the position, adjust the stop loss on the rest of the position to a break-even level on the whole trade. And so if you bought it at 20 bucks, sold it at 25, let's say, that's $5 profit. That means your break-even is $2.50 or half below that. So that'd be $17.50. So your stop loss would be all the way down there after you've taken part profit, down at $17.50, which is right near the low of the whole structure. Prices would be up here. So you're still giving prices a lot of room to move. And you now know that you're either going to break even or make money. And from there, well, it may very well continue the very long-term uptrend. So that's a good little overview for you there of how I look at these things, and an actual example of something I've shown you just a month ago. So if I was to jump to the daily chart to make it a bit clearer for you, and it was sort of around here, this area, once it had really started to turn back up. Now I was saying I'd let you know that it was looking good, and now it's just starting to break up, and you know, not too much resistance around, so it should actually have a good run from here. I guess we see how it goes. And look, there's another couple of stocks that are in a similar situation. If I just quickly show you on a monthly basis, and we look at Ramelius, for example, another similar setup, and I'm looking at this very strong wave to the upside recently, down into the buy zone there, monthly buy pivot, should be on the road back to that point of control at $1.40, and Evolution bouncing back quite nicely. We have this overall long-term trend to the upside from 2015 to 2020, major buy zone there, monthly buy pivot. Look, it can still have weakness, as I've said, but you're aiming for a target back to that point of control, you should get that if gold can hold in there. So yeah, it's just an interesting little setup there in gold, a few gold stocks. Hopefully you managed to jump on. Let me know if you did. All right, well, that's enough for this week. I shall come back with more next week. We're heading to Christmas time. Maybe we're in for a bit of a Santa rally. I'm sure a lot of fund managers would love to see markets rally over the next month to give them a chance of getting a bonus this year. So we shall see. All right, cheers. I shall chat to you soon.